In this video, we're going to talk about how to amortize your creative investing offers coming up. What's going on, everybody? It's Jamel Gibbs. Welcome to another video. Listen, in today's video, I'm going to share with you how you can amortize your creative investing offers when you're doing seller finance deals. Now, previously, I did a video on my creative offer formula. And if you haven't had a chance to check that video out, be sure to check that video out up at the top. And that way you can fully understand exactly what I'm going to talk about here in this video. I want to focus specifically on the amortization period when it comes to these creative offers. Now, for those of you who don't know what an amortization period in its simplest form, it's basically the amount of time that you have to pay off the loan on a property. So if you were to get seller financing on a property for, let's say, 10 years, then your amortization period on that property is 10 years. If you were to get seller financing for 30 years, or you get a mortgage on a property for 30 years, your amortization period on that property would be 30 years. When it comes to the creative offer formula, we're going to talk about some key phrases that I want to give you some definitions on first. I talked about the amortization period. Another thing that we're going to talk about is balloon payments as well. In a nutshell, a balloon payment is basically a lump sum amount that you're going to have to come to the table with or provide to the seller after your amortization period is up. So let's use the 5-year time period as an example again. Let's just say that you took out a $100,000 loan from the property, or you were to go to a mortgage company and you take out a 5-year loan. And then after that 5 years is up, you have to provide a balloon payment to the mortgage company. Basically what that means is if you had a $100,000 loan and you paid off, let's say 20 grand in 5 years, your balloon payment on that property would be $80,000. If you paid off half the property, let's say $50,000, then your balloon payment is going to be $50,000. If you paid off $70,000, your balloon payment would be $30,000. You know, you understand exactly where I'm going with this. But the way this creative offer formula works is this. It's really simple. It's basically the price of the property plus the rental comps in the area divided by 2, and that equals your creative offer. And of course, you're going to have a down payment with that as well. So let's put that in numbers terms. Let's just say that this property, this fictitious property here, is going for $100,000. The seller contacted you and they say, hey, I want $100,000 for this property. What I'm going to do is offer the seller exactly what they're asking for. And this is really effective when it comes to getting deals for your real estate investing business, because you never have to negotiate with the seller. You're actually giving the seller exactly what they're asking for on the property. So that's going to allow you to pay top dollar for real, no matter what the condition of the property is. Now, granted, if it does need work, you may want to negotiate that price a little bit. But for the most part, you can give the seller the exact asking price that they're asking for, provided they play by your terms on the property. Does that make sense? So again, using $100,000 as an example, if the seller contacted me and said, look, I want 100 grand for this house, I'm going to go ahead and offer them exactly what they want. I'm going to give them $100,000. But here's how I'm going to play my terms when it comes to my creative offer. I'm going to find out what the rental comps are in the area, and I'm going to divide that number by 2. Let's just say that the average rental comps in the area are right around $1,000 for this fictitious property. I'm going to go ahead and offer the seller $500 per month. So not only are they going to get the full asking price, I'm also going to give them $500 a month as my payment offer on that property. And in addition to that, I'm going to give them $10,000 down, using this 10% as an example. Now, here's the deal. This 10% is negotiable. It's entirely up to you and what you can negotiate with the seller. It can be 3%. It can be 0%. It could be 5%. It could be 20%. I find that my sweet spot is 10%, but this is all based off of your circumstances. Another thing you want to keep in mind, this 10% doesn't have to come out of your pocket. And in my previous video where I shared my creative offer formula, I shared some strategies on how you can actually come up with that money. So make sure you check that video out as well. So again, if I offer the seller $100,000, $500 a month, and $10,000 down, generally speaking, the seller should be pretty happy with that. But most of the time, the sellers don't want to collect the $500 a month for a long period of time. Okay, so you're going to have sellers asking you, how long do you need for me to hold the financing on this property? How long do you need the note to be on this property? And the note is basically the mortgage on the property. How long do you need to make these payments for? An easy way to present your amortization period, which is the amount of time you have to pay off that loan to the seller, is not in years, not in months, but in payments. It's a psychological thing. I'm gonna explain exactly why. What sounds better to you? Mr. Seller, I need to pay off this property in 10 years. Most sellers are gonna throw their guards up. I'm telling you from previous experiences. What sounds better, 10 years or 120 payments? What sounds better, 120 payments or 120 months? To me, 120 payments sounds the best. So you can literally tell a seller, look, I'll give you $100,000 on this property. I'll give you $500 a month, which will be paid towards the $100,000, and that's how you can get a 0% interest rate with the seller. I'll give you $10,000 down, and I'll also give you a balloon payment, again, a lump sum of money after 120 payments. Now, in essence, what you're telling the seller is you need 10 years to pay a certain amount of the mortgage off, and then after that, you're gonna give them a lump sum of money, a balloon payment at the end, or maybe you'll pay the entire property off in that certain time frame. Either way, you're gonna use a certain amount of payments versus years and months, because payments is easier to sell. You have to remember, this is all psychological. This is a sales game when it comes to real estate, and you have to make the seller feel comfortable. And you don't want them to throw up their guards, because that's an easy way to go ahead and lose a deal. So when you're presenting your amortization period to the sellers, use payments, the amount of payments you want to make versus the time period that you need in order to make a certain amount of payments to the seller. That way the seller can feel ease, and in the back of their mind, they're not really paying attention most of the time to the amount of time you truly need in order to pay off the loan or pay a certain portion of the loan off. So just to recap this, you want to go ahead and offer the asking price plus the rental comps divided by 2. You want to offer a certain amount down, but when it comes to the amortization period, go ahead and offer a certain amount of payments versus a time period. And that way you can go ahead and get more creative investing deals in your real estate investing business. I hope you benefited from this video today. Let me know what you thought. Leave a comment in the comment section. This is all psychological. It really is. And if you present your offers to the seller in the right manner, you'll find yourself getting a lot more deals than the average investor in your local market. Be sure to like this video, subscribe to this channel, click the notification bell, and listen, I'll see you guys on the next one. Peace.